Spain, known for sunshine, paella, and beaches, is now making headlines for something else. It's growing faster than almost every other major economy in Europe. But here's the twist. This boom isn't just about tourism. Something deeper is powering Spain's rise, and it could keep the country ahead for years to come. So what's really behind Spain's success? And could it be a model for other nations? Let's break it down. Since the pandemic, southern European countries have been recovering well, but Spain has pulled ahead. Goldman Sachs economists have upgraded their forecasts, now expecting Spain's economy to grow 1.9% in 2026 and 1.7% in 2027, slightly higher than previous predictions. That's not just good news for Spain. It also nudges the eurozone's overall growth up. At first, many assumed this recovery was all about tourism. And yes, tourism gave a big early push, but Spain's growth story goes beyond beaches and hotels. The real driver? A shift toward high-value services, industries like finance, real estate, IT, and professional services. These sectors produce more value per employee, meaning better productivity and higher wages. In fact, their share in Spain's GDP is now 3 percentage points higher than before the pandemic, and that increase is even greater than in the rest of the eurozone. It's a structural change that many investors, according to Goldman Sachs's Filippo Tade, don't fully appreciate. And it's reshaping Spain's economic profile. Spain's comeback is impressive when you consider it took one of the biggest economic hits in the EU during COVID. But by 2024, it had completely closed the gap in GDP per capita with the rest of the euro area. Immigration is playing a big role too. Spain is taking in more newcomers relative to its population than Germany, France, or Italy, and many of them have high levels of education and skills. That's boosting the labor market and future productivity. Another advantage? Spain's economy is less vulnerable to U.S. tariffs compared to other European countries. Its exports to the U.S. make up a smaller share of GDP, and the products it sells aren't as exposed to industrial competition from China. That means Spain might avoid some of the turbulence hitting the wider eurozone. Now, politics in Spain have been messy. The government hasn't had a stable parliamentary majority this year. But interestingly, this hasn't hurt its economic outlook. Spain's tax and spending levels are structurally lower than countries like Italy, which gives it more flexibility. One side effect of political deadlock? The government has been slower to spend the massive EU recovery fund, designed to help countries rebuild after COVID. That means more spending could be pushed into 2026 and 2027, giving the economy a delayed fiscal boost. On top of that, Spain is expected to increase defense spending and keep its budget deficit at about 2.6% of GDP in both years, another layer of support for growth. So, can Spain keep this up? It's got momentum, structural changes in its economy, and a demographic edge. But global shocks, from trade wars to energy prices, could still slow things down. What's clear is this: Spain's recovery is not just a bounce back. It's a transformation. And if the trends hold, Spain could remain one of Europe's top economic performers for years to come. What do you think? Is Spain rewriting the playbook for post-pandemic growth, or is this just a temporary high? Let me know in the comments. And don't forget to like and subscribe for more deep dives into the world's biggest economic stories.